G'day ladies and gentlemen, welcome back to another Bitcoin analysis. Today we need to look at a few things, including the order book on Bitcoin, and we need to reiterate the strength of this 25k region. We also need to look into how important this move is for Bitcoin in general. And finally, we're looking into a similarity that I'm seeing on the charts between the 2019 bear market breakout and the current move upside on Bitcoin. So before we get into any of that, we need to look at the VIP results just briefly. If you're interested in VIP, if you're interested in getting altcoin trading signals from myself, the Wolf of Crypto, and with other community members in the Wolves Crypto channel, it's 100 USD for 3 months of membership, and these are the results we had for Q4. You can pause the video and take a look on the screen here. You can just briefly listen to me speak about it. 24 winning trades and 5 losing trades, with 11 trades waiting for entry over a 90-day period. Most of the trades at profit were over 100%. Very good results there for the VIP group. So without further ado, let's get straight into the video. I want to start by speaking briefly, and this is something we've covered extensively, but I'm speaking briefly about it to give a premise for the rest of the video. Briefly about the importance of 25k. So 25k, of course, is the top of the range we've seen on Bitcoin since June 2022. And so being the top of the range, if we break out of that range, we're obviously going to be moving further to the upside to the next resistance level. Given the fact that this range is supported not only by horizontal resistance, but also by moving average resistance as per the 200-week SMA and the 50-week SMA, it makes it a critical and very strong resistance zone. But what's important about this zone is that once we break above it, which I think will happen eventually because I think the bottom is in, but I don't know if it will happen on this attempt per se. Once we break above it, we're visualizing, what's visualized in the volume profile is that once we break above 25.2k on a weekly candle close, we will zoom upwards to 28.6k because there is very little resistance as visualized by the volume profile between 25.2 and 28.6. So that's why the zone is so critical. It's a major resistance zone. It's one of the strongest resistance zones Bitcoin has faced in a long period of time. We're talking years here. And if we do break above it, we'll be moving upwards very rapidly over 15-20%. So that's why it's so important. Now, it's also important because if we do reject here, we are at risk of forming a Wyckoff accumulation pattern. Now, a Wyckoff accumulation pattern is essentially a market pattern determined by someone named Richard Wyckoff way back in the 1900s. And essentially, he said that these patterns are, and they're called Wyckoff patterns, these patterns are patterns used by whales to kind of manipulate the price action to get the best possible price for themselves while scamming retail to a certain extent, right? So it's basically what whales do. They play whale games. And this Wyckoff accumulation pattern, which we're following quite precisely here, if we do reject from 25.2k and we do follow it even more than we're already doing so, we are at risk of going downwards as per the Wyckoff accumulation pattern and forming a new low. Now, the problem with that is this. The 4-year cycle theory on Bitcoin, which is what I have predicted the bottom based off, and it's also what I predicted the top based off, the top being at 63k and the bottom being at 16k, which is where my predictions were, just very close to the bottom and top. I used the 4-year cycle theory to predict those things. Now, the 4-year cycle theory is the strongest trend Bitcoin has. It is what builds up a dramatic amount of macro reliability on Bitcoin in long-term investors. In order to have macro reliability, in order for institutions, in order for retail to be confident long-term investing in Bitcoin, there needs to be a structured trend like the 4-year cycle theory. Otherwise, they're not confident anymore because it's just random, right? So the 4-year cycle theory says the bottom was in November. Now, if Wyckoff accumulation is correct, and we go down and we bottom out sometime in April or May, that invalidates that part of the 4-year cycle theory, and that massively hinders the macro reliability for Bitcoin, and hence massively decreases the chance that institutions and retail are going to long-term invest in Bitcoin because the macro reliability is damaged. So that is adding to the reason why 25k is so important. Because if we fail to break out from 25k and we correct downwards and we see, more than a healthy correction, because we can see a healthy correction and then come back up, but we see a new low, that not only destroys Bitcoin's chances of rallying above 25k, it also destroys the 4-year cycle theory, which is very, very bad. So that gives you an idea of how important this zone is. Now, the reason why I am waiting until a weekly candle close. Okay, let me backtrack for a second. I don't think anyone should be trading right now. I don't think so. Okay, I don't think you should be taking longs, and I don't think you should be taking shorts. Now, yesterday I said I don't think you should be taking longs. I didn't say anything about shorts. The reason why I'm changing my mind on this is because there is something going on in the order books that is very interesting. So, what I would suggest you do is this. Wait for a weekly candle close above 25.2k. or wait for a rejection above this level entirely before taking longs or shorts. In my opinion, this is a no trade zone. I'll tell you why. Well, here's the reason, right? The order book on Bitcoin is heavily stacked to the upside. What this means is that there is a dramatic amount more of kind of sell orders, okay? Whether it be stop losses, whether it be sells, above 25K. Meaning, we are at risk at this point in time to see a short squeeze, okay? What this means is that we could very well see on Bitcoin, and this is something Mega Whale Crypto talked about quite a lot in his most recent video, if you've seen that, we are at risk of Bitcoin, of seeing a short squeeze in which we quickly go up to the upside. And everyone thinks it's a breakout. Everyone jumps in, okay? All the shorts get liquidated because there are a massive amount of shorts in this region as well. And everyone gets scammed, and then we come back down and drop straight away. We are at risk of that happening. The only way to avoid getting caught in that trap, okay, is to wait for a weekly candle close above 25.2K. Now, a weekly candle close above 25.2K will give us the confirmation that it's not just a random short squeeze, that it's not just a random scamming to the upside, because a weekly candle breakout is a very strong confirmation of a trend reversal and a very strong confirmation of a move being confirmed, okay? So the reason why I don't think you should do longs right now is because obviously that short squeeze isn't guaranteed to happen, and we could just reject, and hence you're longing into very, very strong resistance, which is completely illogical. And the reason why I don't think you should short right now is that if we do see a long squeeze, which again is relatively likely, you're just going to get scammed and then lose all your money. So basically, I think right now there is no real profitable trade to be made in this price region. Now, it's not very often that I say that. I don't say that very often at all, but this is one of the scenarios in probably months where I've said something like that. I don't think there is any reason to be trading longs or shorts in this price region for Bitcoin right now. I think you should be waiting, and I think that you wait for the next move, wait for some volatility to kick in. And some volatility will be kicking in soon, because we're seeing tomorrow the Federal Reserve minutes meeting, and that will be discussing things like interest rates, things like inflation, and that could bring some volatility to the market. So perhaps we'll see a fresh piece of analysis tomorrow, a fresh move, and hence fresh consolidation, and hence we can make some fresh decisions. But as of right now, this is certainly a no trade zone for Bitcoin in my personal opinion. But yeah, ultimately, I'm still kind of leaning towards a downside move, unfortunately. And I do think that downside move won't bring us to new lows. I think it will just be a healthy correction. I do think, just based off my experience with TA, it's quite unlikely that you see a breakout of resistance on the first time you go up to test it. Because remember, this time over here in August 2022 was actually confirming that or validating that region as resistance, as the top of the range. This is our first actual retest of the top of the range. You don't really see a breakout in the first retest, generally speaking, just going off basic, kind of my basic experience with TA. Now, obviously, it is possible. It just doesn't seem relatively likely. We're also seeing, descending volume on the weekly chart. So on a longer term scale, as we have moved upwards, and this is measured from 16K, the volume has been decreasing generally as we move further upwards, which shows a bit of weakness there. But the one bullish thing I will say is that Bitcoin seems to be mimicking what happened in the 2019 breakout. As you can see, we saw consolidation to the downside in kind of this kind of circular formation there. I guess you could say this inverted head formation. We saw a break to the upside. We saw small consolidation as we entered the Gaussian channel, and then we saw a second blast off. Now, we are mirroring that to a certain extent, okay, because we did have a cup formation here. We did see consolidation. We have entered the Gaussian channel, and if we're following 2019, we should see a second blast off. I don't know how likely that is. It's very hard to say it's likely just based off one thing that I'm looking at right now. I think the best thing to do, regardless of any of this longer term analysis, as I said before in this video, is stay away from the market right now. Not the market in general. Stay away from Bitcoin right now. And stay away from leverage positions in general, just until we get some more clarity in this position. We need to be seeing a close above 25.2K for any real bullish progress to be made. And for any real bearish progress to be made, we need to be seeing a breakdown below 21.6K, which would confirm a lower low, because that was our most recent low. So again, to the upside, 25.2K, to the downside, 21.6K. Until we do any of those things, we're kind of just lurking in the same price region with the same real risk-reward ratio of an upside break to a downside break. So that's what I'm looking at for Bitcoin right now, guys. Thank you for watching the video. Let's look at the BitGet Exchange briefly and the Crypto Academy. BitGet Exchange, they have a partnership with the Wolves Crypto YouTube channel. We have an exclusive kind of offer we're offering you for the next 3 days until the 24th of February. If you sign up to the BitGet Exchange using my referral link, not only will you get a 15% discount on fees, but you will also get 15 USDT and 15 BGB kind of awarded into your account after you make your first trade free of charge. So go ahead and do that. It's the best way to support the channel as well. And it's also the best exchange in the market, in my opinion. Cheapest fees, non-KYC, all the 9 yards there. Or the whole 9 yards, I should say. And then also, if you're interested in trading cryptocurrency, we have the Crypto Academy courses, and we have the Crypto Academy Become a Trader 10-unit course, which teaches people how to trade crypto and how to trade in financial markets in general, how to analyze charts, etc., how to use market patterns, how to use indicators. So this course will tell you everything you need to know. If you're interested in that, go to the website. You can find out all the information on the website, and you can sign up to the course if you want to, using the email link that we've got down here to ask us any questions or get payment information so you can make a sign up to the course. So thank you for watching, guys. I hope you enjoyed the video, and I'll catch you in the next one. Cheers.